Good afternoon, everybody. In a departure from tradition, Jay and I are going to attempt to self-moderate this session. So there won't be anybody asking questions. This will be a conversation between us and also a conversation between us and yourselves. But to start off, we're each going to make 5 to 7 minutes worth of remarks about our perspective on this question of, is financial services really about people, or is it really about technology, and what is the future? I'm going to start. As many of you know, I had a long career in financial services, culminating in being the Group Chief Executive of Barclays, and have now crossed over to the FinTech side in my own business, 10x Future Technologies, which is basically a business I founded based upon 2 observations that I had in my long banking career. And the first observation was that banks really didn't seem to work for their customers very well. The banks seem to work pretty much for the bank. Banks like to sell products, they like to make money, and customers are sort of a necessary requirement in that process. And the second observation I had was that actually technology hadn't created transformation in financial services, the sort of transformation that we've seen in other areas of our lives. For those of you who can remember 20-odd years ago when the internet was first gaining traction, we saw things like retail, travel, content, how we interact with each other. All of those things were transformed by technology, but financial services really moved very slowly. Yes, we had internet banking, ultimately mobile banking, but these things have not to date really been transformational. And I founded 10x on the basis that it was possible, through a deep understanding of banking and a deep understanding of technology, and particularly cloud-native technology, to build a platform upon which you could create banks that were 10 times better than the kind of old-fashioned way of doing things. And I'll come back to that a little bit more, but the underlying observation that I have about what's going on in the banking industry is that banks are really hemmed in by 3 forces. They're the sort of 3 technology forces bearing down upon the banks. The first is, of course, the legacy infrastructure. I've often observed that banks are like museums of technology. If you look inside a bank, almost every generation of hardware and software sits there, architected in a very clunky way, architected around products, not around customers, and so on. The second force, of course, bearing down on banks is FinTech. And I've been involved in FinTech now for almost 5 years. If you walk around outside, you can see a lot of great work that's being done in all different types of FinTech, whether it's in narrow verticals like compliance, in direct-to-consumer businesses like the neobanks that we have, or in peer-to-peer lending, wealth management, all of these things. And the reason why that's important is because FinTech itself, while we can debate whether the business models in some cases will ultimately be successful, we do know that what FinTech has done is raise the bar. And existing players in the industry, the incumbents, remember I said a moment ago, hampered by their legacy technology, need to respond to that because their customers are demanding a better experience. And then finally, and perhaps the biggest threat of all, is big tech. And one observation I have for you today is that if you think about financial services, really financial services are all about data. There's no physical artifact that goes along with a financial services product, unlike Apple, who has to make devices, or Amazon, who have to deliver things. Financial services companies are just moving data around. And if you're much better at moving data than your competitors, you can offer the customer a stronger experience. And we are starting to see very slowly the big tech companies move into financial services. It's not my expectation that big tech companies will become banks. I think they're far too smart for that. Why would you want to operate in a capital-intensive, heavily regulated industry? But it is possible that the big tech companies could create a layer between the customer and the traditional banking industry in which they cream off a disproportionate share of the value, and we see certain models like this emerging in Asia. So those are the 3 forces that are bearing down on banks. What does the future look like? For me, it's the 3 Ds. Digital identity, data, and distribution. So if you think about it, data without linkage to a real entity, be that a person or a corporate entity, is not that much use. And increasingly, I think in the West, we're going to have to accept that a digital identity of some sort will be required. My expectation is this will be provided by the state. It'll be about data. As I said before, all financial services products are just data. This requires a great deal of efficacy in how data is handled, be that data around marketing, fraud, operational issues, credit risk management, and so on. And finally, distribution. And increasingly, I think we will live in a world where financial services products are provided on a distributed basis. If I have to make a payment to you today, I have to instruct my bank. That bank moves money through a central clearing system to your bank, and you ultimately receive the funds. There's a lot of entities in the middle of that process who are all taking their little piece of the pie. Risk gets trapped in those entities, and where there's risk, capital has to be held. And although I think we would all have a certain degree of skepticism about, cryptocurrency as the end state, what is going on in the crypto world shows that the ability to transfer value through distributed systems is possible. And that is true not just of value in terms of money, but it's also true in value of terms of assets, real estate, fine art, diamonds, securities, and so on. So my view of the future is we are going to see some very significant transformation within financial services. That's why I set my business up, 10x Future Technologies. For me, the technology has arrived to create true transformation in the industry. That technology is mostly cloud native. And I think the transformation will be characterized by a focus on digital identity, data, and this notion of distribution. In the next 10 years, we're going to see some very, very significant and disruptive change, I think. And with that, over to you, Jay.
Okay, thank you, Anthony. And good afternoon, ladies and gentlemen. It's really a pleasure being here. And I was asked to sort of share my views from the part of banking in the United States. And sort of like Anthony, I had the privilege of being on the board of Banco Santander in Madrid. So I have an experience of being a part of a very large bank and starting a bank which was traditional. And about 8-10 years ago, I decided that wanted to be involved in creating a business bank for privately held businesses without any branch. And we made an assumption that there would be no what if branches were illegal. So that makes you think differently. And then about 3.5-4 years ago, we started a consumer bank that's called BankMobile. And again, branches are illegal. You got to think about distribution strategies. You got to think about product. You got to think about packaging. You got to think about the market that you have. You got to think about how are you going to be differentiating yourself and how are you going to be unique from the legacy players and how are you going to have a profitability model that's sustainable and be able to operate successfully in the regulatory environment. So I'd like to share with you some of those thoughts very briefly. So Anthony and I agreed that we will have at least a third of our time to have input from you and answer any kind of questions that you may have. So starting off, just some facts about US. I completely agree with Anthony that banks are not customer-centric institutions. Banks are institutions that are built upon profitability maximization by taking advantage of their customers and saying all the good stuff that we are customer-centric. And to give you an example about the United States in consumer banking, well, when the rates come down, banks say, oops, we can't drop our cost of funds enough, but our lending rates are coming down, so it has a squeeze in margin, squeeze in profitability. When rates go up, they say, wow, we're not going to pay anymore, but we're going to enjoy higher rates on loans, so that's an improvement in our margin, improvements in our profitability in consumer banking. That itself tells you who are the customers of a bank. They are the providers of funds to the bank, and the bank's duty is to promote economies by multiplying those deposits as such in the economy and circulating that. So banks make money in US by screwing their customers, right? Simple as that. And who are these customers? The deposit customers. So what is FinTech? FinTech is nothing, in my opinion, other than what banks should have been doing to use technology to effectively serve their customers, make their lives better, make them more successful, and become more efficient, and stay relevant. That is what banks should have been doing. But they decided not to do it, and you see examples after examples in industries. And one of my favorites is Clay Christensen. Unfortunately, he passed away a few days ago from Harvard Business School, and he's written about disruptive technologies. And I think FinTech is bound to be a disruptive technology for the banking industry, without any doubt. However, it's going to be much slower than other industries. Why? Because people have an emotional connection to their money. So there are 4 things that I believe are going to be absolutely needed for the fintechs who are going to survive and who are going to make it. Number 1 is that they must offer a product or a service that is 10x better than what is being available from the legacy players right now. And that's why I love your name, right? 10x better, right? Number 2 is that they must the product or service has to be more affordable and must be loved by the customers. So test your offering on that basis. Number 3 is that there must be an opportunity for exponential growth. And last but not the least is that there must be a business model where your returns on the capital that you've invested and the risk that you're taking are at least equal to that of the legacy players. Because if you have a better product, loved by the customers, you're bound to have an exponential growth. And then if you want to have a sustainable business, you must have a profitability. I believe that 50% to 75% of today's fintechs are not going to be around in the next 5 years. Why? Because they are violating 1 or 2 of these principles. VCs can only support you so long. And you don't want to be the 80% of the companies that fail, started by VCs. You want to be the 20% that becomes eventually unicorns. So what is the future of technology in banking? Banking to the consumer, and I'm going to talk about consumer, although at our company we are spending more time right now in how do we use technology to be a business bank. Because that is absolutely huge opportunity, totally untapped. Everybody's going after the consumer, everybody's going after the low end of the consumer, everybody's going after the lowest margin business, and very few are going after the very, very high quality business opportunities for us. So anyway, in my opinion, banks go to the consumer by banks through the branches to the customer. What BankMobile has chosen to do is go to banks through a business partner to the consumer. In US, banks distributed themselves to the consumer by having branches either close to where people live, close to where people shop, or close to where people work. Guess what? We've decided to use technology to not only develop products, but also distribute them with business partnership where people work, which is, we call it workplace banking. Where people shop, we call it like our banking with a top-notch, world-class wireless provider in the United States. And then where people live, 1/3 of every college-bound student in the United States goes through our platform of BankMobile. So that we found a way to partner with 1/3 of every college and university in the United States to offer financial services to those students. So that's an example, I'm telling you. What we call that digital branches, almost. All right? Create the digital branch. Why should you? I mean, technology exists today. Technology exists today where you're walking into a bank branch and Siri or Google will tell you what kind of a stuff do they offer and how does that compare with any other options you have. Technology exists today to help you answer your questions about how can I be more fiscally or financially successful and how I can be better. And what are the banks doing? They're giving it lip service. So I encourage you all who are in the fintech industry to think out of the box, but definitely have a model that you are going to be successful and you'll be a survivor. You should partner with banks because what you are doing is what banks should have been doing. So they need you. All right? And banks have customers, you have technology. And without customers, technology is not going to last. Okay? And you need both. And you need liquidity for those of you who are marketplace lenders. And again, in that partnership, it can be fantastic. So that's our approach to it. And I completely agree with Anthony in terms of looking ahead. No question about it. It'll be very, very much data analytics, data-driven. And data is something which banks have. And data is something that banks do nothing with, all right? Majority of them. And number two, I think, is AI-driven applications are going to be an absolute huge opportunity, not just for those of you who are looking at AI for onboarding or AI for reg tech or AI for decision-making on credit. All those are operational issues. You got to think about AI to help banks and other providers develop an emotional connection with the customer. And once you do that, and you have a good product, you will create a customer for life. And in financial services, you must create a customer for life because it's awesome when you attract a customer and then the customer lives for 60 years or 70 years after they are financially independent, and you're going to make money and revenue and have a partnership with them, and they will talk about you and they'll thank you for the rest of their life. So with that, I think we'll open it up, Anthony and I. We got about a third of our time, and so please, any question anybody has. If not, I'm going to have a question for you, Anthony. We'll get started.
All right.
And that question is, with your experience of running a global bank and now a FinTech, all right, what differences do you see in terms of the day-to-day role of a leader at one of those companies?
I mean, in many ways, there's a lot of similarities because I always thought after you got to the point that you couldn't get everybody in a conference room, the challenge of leadership was really about how you communicate the mission and the values and the performance requirements to a large group of people. In 10X, we have about 550 people. When I was running Barclays, we had 130,000. But in some ways, the challenges are quite similar. But there are also a lot of differences because running a large organization, however much people feel they're resource constrained, you're not nearly as resource constrained if you're having to raise money or sell business, in order to make payroll. So that's a different type of thing. But also the speed at which you can move as a leader is a great gift in the FinTech environment. And to your point, doing something that's really customer focused, that's solving a real customer problem, whether in our case, solving a problem for a bank that allows them to solve a problem for their customers, that's incredibly exciting. And frankly, for us, we're able to attract talent either from the tech world or from the financial world that wouldn't work for a big bank because they think big banks are dinosaurs and really boring and stultifying to work in. So on the whole, there's quite a lot of advantages to doing things in a much smaller, more dynamic, more entrepreneurial environment. But many of the challenges remain the same. I had a question for you, actually. In terms of you referenced this in terms of partnership. You also said that you thought that these changes were going to take a long time to play out. What is your view of what we might see in the next 5 years, 10 years? Do you think banks are going to sort of shrink away from the customer relationship and let the big tech companies do it? Are some fintechs really going to become as big as a Citi or a JP Morgan or a BNP Paribas? What would you think about that?
Yeah. Thank you. That's a very good question. And right now we are partnered with one of those large tech companies. But my view is that, just like you said, the tech companies are smarter. They don't want any banking regulators to be messing around with, right? So they will not become banks. But they also know that financial products and services creates a stickiness and a higher engagement. I call it emotional connection, with their customer, so that they would have a desire not just as another profit center, but to use the technology that they're developing in finding ways to better serve the customers so that they are better engaged with the customers. That will pose a threat to banks. Because banks are right now, if you get a customer, at least in the United States, they scare you, oh, your bills will be screwed up and your paycheck may not come in. If you move your account, we don't have the easy transfer of open banking that you have in Europe. We have a kind of a monopoly by banks. And so I think that's why I said it'll probably take longer. But in the business banking side, I think it'll be a lot quicker. And I think the FinTechs who will probably be more successful are the ones who will use the technology firms as partnerships, not just to adopt the technology, but also to come up with a model of profitability in banking, and that is both non-interest income or the fee income plus net interest income. That's how banks make money, folks. They have treasury services or other types of services, but they have at least 30, 40, 50, 60, 70, 80% of their income come in from net interest income. That is the banking model. So I personally would love it to see FinTechs sort of get into both sides of a bank's balance sheet. That is, helping banks get deposits, helping banks get loans, helping banks manage risk, helping banks improve their engagement with customers and use it with the data. And look at it that way. In other words, provide the infrastructure for a complete bank, and the banking is very inefficient. That's where I think the big tech and the banking have a huge opportunity, and certain FinTechs which want to survive, and banks will have a huge opportunity. Any questions from the audience before I ask Anthony another one?
I thought I might ask you, actually, in the audience, given this is not a representative sample, but how many people here think that the traditional banking industry is characterized by, the BNPs, the Paribas, the Citibanks, the Deutsches? How many people think that will be smaller in the next 10 years? How many people think, show of hands, how many people think it'll be smaller? Pardon? Or some people think it's disappearing. I'd say it's about half the people. And how many people think that there might be a FinTech that's at least well known, maybe not as big, but at least as well known as a big bank today in the next 10 years? How many people think of FinTech? Good. Obviously not a self-selecting audience, but clearly quite a pro-FinTech lobby here in the room.
And I would just add, those of you who raise the hands, you'll be successful. Please don't think Chime at a $5.4 billion market cap is the only criteria to be successful. Ask yourself a question: what is my return on capital for my investors? Eventually, successful companies must answer that capital allocation question.
It's an interesting point to raise. Quite a lot of discussion in the FT today about that exact point. How long will the VC community continue to support customer acquisition models in B2C without a profitability horizon? My view is actually enterprises, particularly high growth enterprises in new sectors, don't necessarily have to demonstrate the same ROE characteristics as an established business, but they certainly have to show how they can get to cash flow positive position in a reasonable time, because then you're not dependent on outside forces and you can reinvest for growth. And certainly that's one of the things that we talk about and think about a lot in 10X. It's how can we continue to sort of chart our own course, if you like. And that's going to be an important consideration as these FinTechs scale.
So we have 45 seconds left. I just have one question to the audience. How many of you are here are bankers?
Don't be shy.
Wow. 2 or 3?
Well,
is that the way?
It's about 10%, maybe 5%.
Really? And the rest are all FinTech? How many over here are in the banking FinTech, bank tech? Okay, thanks. Well, I think our time is up, Anthony, and thank you so much. I've really enjoyed this partnership of ours. We just spoke on the telephone, and I'm so glad to see finishing up and wrapping it up with 9 seconds left, and to arrange without a moderator. You know, it's something. Thanks so much, everybody. And
Thank you, everybody.
Anthony.
Appreciate it.
Yeah.
Thanks.
Okay.